Hi, everybody. Welcome back to Wired to be Rich, where we are building wealth, expanding our perspective, and very much trying to stay mentally stable while the global economy decides to act like it's in its true villain era. If you're new here, welcome. If you've been here for a while, you already know the vibes. I appreciate you more than you know. Love you guys so very much. Lately, I'm not going to lie to y'all. I've been sitting here looking at my portfolio. I'm making a lot of moves this year, and I'm super focused like I've never been focused before. And I need to look at my portfolio to make some of these moves happen, right? I got to get back into it. Not that I ever stop, but I got to go even harder. And so I did the research. I have the strategy, and I enter trades with discipline. And somehow the outcome still feels like I made a decision based off vibes and astrology. And then the crazy part is, like, I'll check the news and it's like, oh, okay, there's literally a war impacting global oil supply. It's still going. It's not stopping. I don't see an end date anytime soon. Inflation expectations and market liquidity, like, okay, cool. I love that for me and my plans. But you know what? We don't care because we are grounded and we are determined, no matter what that looks like. So today, we're talking about what it actually feels like trying to trade and build wealth in a market that is reacting to global conflict, rising oil prices, and just pure uncertainty. And while your portfolio isn't crazy, it's just responding to the world. So if you're ready, let's get right into it.
She's not just a podcast host. She's a movement.
Manda Lea is teaching people how to break cycles and build real wealth, mentally, financially, and spiritually.
People all over the world are waking up to her message.
Wired to be Rich isn't just a podcast, it's a mindset shift.
She makes you believe again in yourself, in your power, and your ability to actually have the life you always known was meant for you.
Hi, everyone. I'm Manda Lea, entrepreneur, speaker, and founder of Balance and Destiny, and this is Wired to be Rich. Okay, so there's a moment that happens when you start taking investing seriously. And I'm going to break this down so that way y'all understand what I mean by investing and what I mean by trading, right? Because I think we should all take this a little bit more serious because your portfolio matters more than you even realize. So there's a moment that happens when you start taking investing seriously, where you realize that the market is not just numbers on a screen. It's a reflection of everything happening in the world at the same time. And if you're newer to this, or even if you've been in it for a while but never really thought about the why behind price movements. And what I mean by price movements is literally the prices when you open up your little stock screen, whether it's Fidelity, Robinhood, the little stock app on your iPhone, whatever you use, the price for that stock. So that's what I mean by price movements. This is where things start to click. Because a lot of people assume that when a stock goes down, it must mean something is wrong with the company. Maybe the business is failing. Maybe leadership made a bad decision. Maybe something internally shifted. And sometimes that is true. But a lot of the time, especially in moments like we're in right now with this war with Iran, stocks move because of external forces that have nothing to do with the company itself. So I'm going to show y'all how to really capitalize off of what's going on right now and understand how the market really moves. So that way you can make a profit also on your investments, whether it's long-term or short. Right now, global markets are reacting to geopolitical tensions involving Iran. We all know that, right? It's all over the social media, all over our news. And one of the biggest immediate impacts is that of oil. Oil is not just gas in your car, you guys. It's a foundational input for transportation, manufacturing, shipping, and even food production. So when there's instability in regions that are critical to oil supply, prices increase, and that increase doesn't stay isolated. It spreads across the economy. Now, here's where it connects to your portfolio. And if y'all want me to do a separate show episode over how to actually open up your portfolio, how to get to it, and how to access it, I'm available. I might start back doing consults to kind of show people the ins and outs of how to even access that part of your investment profile. So let me know if y'all want that in the comments, or just if you don't want people to know your business, like some of y'all do, just DM me on my social medias. But when oil prices rise. Companies across different industries start facing higher costs, right? So it becomes more expensive to transport goods, like the stuff that you want from overseas, the Shein products. Some of y'all get stuff on Temu. When you order off Wayfair, they're most likely coming from a different country. It becomes more expensive to operate, to produce, and ultimately those costs either reduce profits or get passed on to consumers. This is kind of sort of what even Trump really was getting at when he was talking about making America great again. Like, Trump wants us to produce all of our own products because it cuts out that extra cost of having to pay other people to get things that we need over here in America. But that's a different subject for a different day. If y'all want an episode about that, I'd love to do it. Let me know. But back to this one. So at the same time, investors start anticipating that inflation could rise again, right? And when inflation becomes a concern, it changes how money moves in the market. So even if you're holding a stock that has nothing to do with oil, nothing to do with war, nothing to do with global conflict, the price can still drop. Look at, let's say Apple, for instance. Apple is a tech company, right? You would think on the front end it has something to do with oil or war or global conflict, but you see the price going down. Some of y'all may look at that and be like, oh my God, this is horrible. But real sharks, we see that and we're like, yes, yes, we're going to buy more, right? And it's not because the company suddenly became worse overnight, but because the environment around it changed. It's kind of similar to the episode I did last week about staying steady with your foundation, even though everything around you is going crazy. But this is the part that shifts your entire perspective as an investor. The market is not reacting to just one thing at a time. It's reacting to expectations. It's reacting to risk. It's reacting to what people believe might happen next. So when you open your portfolio and see movement that doesn't immediately make sense, instead of internalizing it as, I made a bad decision, it's more accurate to understand that you're participating in a system that is constantly adjusting to global information in real time. This is really big for the long-term guys. You may wake up and see your portfolio dropped hundreds of dollars, maybe even more, depending on how thousands even, how deep you're into it. But that doesn't mean that you pull out your money. That is a rookie. That is a rookie mistake, because if you pull out, you're profiting less than what you bought in with. You don't want that. And like I said, you guys, I'm happy to do another episode about this to break it down even more. When prices go down, when there's clearly something going on in the world like a war, and you see the stocks are going down, please don't take that as a sign to remove everything out of your stuff and just cash out. I mean, do what you want. I'm not here to tell you what to do with your money and what not to do, but that would be a stupid mistake. You don't want to do that. That doesn't mean your choices don't matter, though. It just means your outcomes are influenced by more than just your choices. And once you understand that, you stop taking every movement personally, and you start looking at the bigger picture of what's actually driving the market underneath the surface. Kind of what I just said. When things are going crazy, when you see companies taking losses and the Dow going down, all the things, ask yourself, what's going on in the world that could be affecting this? The market is one thing I will teach you, and a lot of investors will also teach you. The market is filled and it's ran. You guys, I'm laughing because it's really funny, but the market is ran off of emotions. The market, listen to what I'm saying, you guys. The market is ran off of emotions. When things start going crazy, like wars, crazy political beefs, all the things, people get scared. Why? Because it's their money invested and they don't want to lose out on anything. People are very, 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 very fickle when it comes down to their money. So you have to understand human emotions, how that looks and how it works in real time. And then you'll be able to decide what you want to do. You have to outsmart the people that are actually trying to outsmart you. It's a whole thing, you guys. And I'm happy to go into this deeper. I love this kind of conversation, but I'm just telling you, the market moves off of emotions. And it's really good to know that if you are venturing into day trading, you really have to understand that. People are like, oh my gosh, I do. I read that somewhere, but no, you have to really understand it's all emotions. It really is. It really, really is. So, but once you understand that the market is reacting to global conditions, the next shift is realizing that not all market environments behave the same. And that matters more than most people think. because a lot of people enter trading or investing assuming that if they just learn the right strategy, the right indicators, or follow the right system, they'll be able to consistently predict what's going to happen. And to a certain extent, structure and strategy do matter, right? But what often gets overlooked is that strategy only works within the context it was designed for. In stable environments where economic conditions are relatively predictable and there aren't major global disruptions, markets tend to move in more structured ways. Trends are clearer, patterns tend to respect technical levels more consistently, and there's generally less emotional reaction driving price movement. But in periods like this, where you have geopolitical tension, rising oil prices, and uncertainty around inflation, the behavior of the market shifts. Volatility increases, right? Which means prices move faster and with less consistency. I'm talking to my traders out there. You know what I'm talking about. You see it, right? Because we're all up in the morning at the crack ass of dawn trying to figure out what's going on. Then you might see a setup that looks technically strong. Enter the trade with a solid plan and still experience unexpected movement because new information enters the market and changes sentiment almost instantly, right? For those of you, I know TradingView is a really good platform and I have it too, but for my new babies, Webull is a great platform for you to actually start learning how to day trade because it's a little bit more understanding. TradingView has more options to look at, more little trinkets to play with, but Webull's a good start. And like Webull, you can also have like the little news screen open up at the same time while you're trading. Because let's say, for instance, you're trading a stock called Wired to Be Rich, and then you're in Wired to Be Rich stock at 8 o'clock, looking at the ups and downs, right? And then at 10 a.m., it says, "Oh, the CEO just sold 60 shares of the company." Well, guess what's going to happen? It's all going to go downhill. You want to pull your money out. So it's good to have that set up. I like to have the little news set up also because you never know what's happening. Stuff happens randomly. I mean, I can go even deeper into this. Look at the financial markets. A lot of companies put out information of when they're having certain meetings, certain conferences, or anything like that. Just kind of discuss the financial stuff. They have quarterly meetings. If you're an investor, you can literally invest maybe $50 into a stock, and if you sign up, you can get notifications for quarterly meetings they have. Or it's just, you could go so deep into it, you guys. You really can. It just depends on how deeply you want to actually learn how to trade and how much money you really want to make. But as I was saying, that's the part that can feel confusing, though, especially if you're newer to trading. It can make you question whether you're doing something wrong or whether you're missing a key piece of knowledge. But in reality, what you're experiencing is a change in market conditions, not necessarily a flaw in your ability. Like I told you earlier, just because you see, like I'm talking to my traders right now. No, you know what? No, screw it. Let's stick with long-term investors, right? The people that are learning how to invest in stocks from the ground up. Just because you see a stock go down, it doesn't mean you did anything wrong. It means something's wrong with the environment, and it's your duty to figure out what that is, and then for you to determine how volatile that is for your stock that you're investing in. It has nothing to do with you. It has everything to do with how you respond to your environment. This is why understanding context is just as important as understanding strategy, because the same approach that works in a calm, stable market may need to be adjusted when the environment becomes more reactive and sensitive to external events. In these type of markets, it becomes less about trying to be right on every trade and more about managing risk and staying adaptable. That might look like taking smaller positions, right? Being more selective with your entries, not just if you're day trading. And like I said, if you're new, I highly recommend Webull. This is not sponsored in any capacity. But once you open up your paper trading screen or whatever, you'll see positions, stocks of whatever it is, not just in entries. Not just putting money into every single thing you see, or simply choosing to sit out of certain conditions altogether until things stabilize. This is why it's important to not trade every single day. Realistically, the most high earning investors are not trading every single day. Now, will I look and see what's going on? Of course. But am I going to trade every single day, every single morning? No, it's not realistic. You might make a profit Monday and Tuesday, and then Wednesday, Thursday, Friday, silent, nothing. Or you may make a profit Monday, nothing Tuesday, nothing Wednesday, a little bit Thursday, and nothing Friday. It just depends on what's going on that day in the environment. I keep saying environment because I want y'all to really take that in and understand what I'm saying. Instead of approaching trading like a fixed formula, you begin to see it as something that requires awareness, flexibility, and a deeper understanding of what's happening beyond the chart, right? That's where a lot of growth happens. When you separate your identity from individual outcomes, a trade not working out doesn't automatically mean you made a bad decision, you guys. It could simply mean that the environment didn't support that setup at the moment, and that's okay. We live and we learn. And once that clicks, you stop trying to control the market and you start learning how to move with it. The market's going to be what it's going to be. It's either going to pop or it's not. You can do nothing about that. What matters is how you choose to respond to it. Do your research and have fun, though, but in a smart and fun way. Take your time. A lot of people make mistakes. They'll start learning how to day trade, and by month 2, they're already trading with their real money. First of all, you're capped. You can only hit a certain number of trades per week, unless you have $25K in capital to just use in your brokerage account. But other than that, you can't trade every single day, even if you wanted to. And then 2, a lot of people will just they'll run off. They'll be like, I started learning how to trade 2 months ago and I'm using my real money. Why? Webull gives you $1 million to F off with. You get to play in the real market. Why not take your time? Paper trade for as long as you need to, get some books, do your research, and then when you feel confident, you're going into it way ahead of people that are just starting out. Okay, you want to play with the big boys, and in order to play with the big boys, you got to take your time. You can't just rush into things and be all impulsive and all the things, you guys. Patience is a virtue, for real. Anywho, once you start looking at the market through the lens of context instead of just charts, the next layer is understanding what specific forces are driving that context in real time. Right now, one of the biggest drivers is oil. Ugh, guys. And if you've never traded oil, never looked at an energy stock, and have no interest in commodities, it still directly affects you as an investor. Because oil sits at the center of how the global economy functions. It's tied to transportation, supply chains, manufacturing, and distribution, every single thing. So when something disrupts oil supply, especially in regions that play a major role in global production and transit, the effects move quickly and broadly. And with the current geopolitical tension involving Iran, markets are reacting to the possibility of supply disruptions. Not just what has already happened, but what could happen next. And that distinction matters because markets are forward-looking. Prices adjust based on expectations, not just current reality. So when oil prices begin to rise, it signals potential increases in operating costs across multiple industries, you guys. So this is where I'm getting into the emotional aspect. Companies that rely heavily on transportation or raw materials may see their expenses increase, which can impact profit margins. At the same time, investors begin reassessing risk. If costs rise and uncertainty increases, money tends to move more cautiously, right? Naturally. The shift in behavior can create broad movement across the market. It's not isolated to one sector, not just healthcare, not just tech, multiple. You may see energy-related stocks perform differently, while other sectors like tech or consumer goods experience pressure, not because their business models suddenly changed, but because the economic environment around them did. Emotional. This is where a lot of people get caught off guard. They're analyzing individual companies, looking at their earnings. You start doing all this. They're looking at leadership, growth potential, which all matter. But like I was finna say, they're not factoring in the macro layer, the external forces that influence how those companies are valued in the market at any given time. And this is what separates surface level understanding from deeper awareness. The market is not just a collection of independent stocks, you guys. It's an interconnected system where global events, economic signals, and investor sentiment all interact at once. So instead of asking, why is this specific stock moving? The more useful question becomes, what is the environment doing right now? And how is that influencing everything within it? Because once you start asking that question from that perspective, you begin to see patterns that aren't visible on the chart alone. And you start making decisions with the level of awareness that most people never develop. So once you got that part down, the next level is recognizing what's happening internally, right? Because this is where most people quietly lose consistency. When conditions become more volatile and less predictable, the technical side of trading doesn't disappear, but the emotional pressure increases. You're seeing faster price movements, more sudden reversals, and outcomes that don't align always with what you expected, even when your reasoning was sound, right? Even when you went into it thinking you were so grounded. And what that does over time is that it starts to influence your decision making if you're not aware of it. Meaning, you might begin second guessing entries that you would normally take. You might exit positions earlier than planned because the movement feels uncomfortable. Earlier when I was like, heavy investors or corporations start moving cautiously with their money, same thing happens on a personal level. Or on the other side, you might overcorrect by forcing trades, right? It's when people get trigger happy with that buy button, trying to make up for uncertainty by being more active instead of more precise. Once you start doing that, you've already lost the plot. You've already lost, and you can just expect you're going to lose some money. You don't want to react off emotions, you guys. None of those responses come from a lack of intelligence. They come from reacting to an environment that feels less stable. This is why discipline in markets like this has less to do with rigid rules and more to do with consistency in how you execute your decisions. And that's not something, well, I'll say this. It's about being able to follow your approach even when the outcome isn't immediate or when the market isn't behaving in a way that reinforces your confidence right away. It's something you build by paying attention to how you respond under pressure. Because the reality is, you can have a strong strategy, understand the macro environment, and still create inconsistent results if your execution changes every time the market feels uncertain. So instead of focusing only on what the market is doing, there's value in observing how you're responding to it. I like to think that my show is one big build-up. That's why I say it's called Wired to Be Rich, because we talk about all things wealth. And watching how you respond under pressure, watching how you respond to your environment is like the principle of everything I talk about on this show when it comes to perspective and mindset shifting and understanding who you are on a deep core level. Because once you get that, then you understand why you do certain things and you stop being so impulsive. And it's just a domino effect of like amazing things you recognize about yourself. You start paying attention to if you're sticking to your plan, right? Every morning when I'm about to trade, I write down the stocks that are moving like crazy and I don't pivot from it. I don't pivot from that because if I do, I'm going to get lost in the sauce. I'm going to start trying to trade all types of stuff and it's going to get crazy real fast. It's going to get crazy real fast. So I have a little notebook that I put down as the stocks that I think are going to move good for the day. And I stick to that. That's my plan, right? You start checking to see if you're adjusting it based on short-term discomfort. Kind of like what I just said. If you see that one of the stocks or the trades that you want to do isn't performing correctly, do you say, okay, I'm going to go jump to this guy? No, you pull out. It's okay. You can just trade another day. You know what I'm saying? Or you start asking yourself, are your decisions coming from structure or are they being influenced by recent outcomes? These questions matter more in volatile environments because this is where habits are formed, you guys. And over time, those habits compound just like your investments do. So while the external environment will continue to shift, the part that remains within your control is how consistently you show up within it. And if you're still here, which I hope you are, but I know that the ones that are really invested in learning how to day trade and understanding stock investing and all the things and making more income, I know you're still with me. By the time you get to this point where you understand the external environment, you recognize how volatility changes market behavior and you're aware of how your own decisions And your own decision making can shift under pressure. You start to see that moments like this are not interruptions to your progress, they are just a part of it. Because anyone can feel confident when the market is stable, right? When trends are clear, when outcomes are more predictable, it's easier to follow a plan when the environment is reinforcing your decisions. But that's not where real growth happens. It happens in periods like this that we're in right now, where there's more uncertainty, more noise, and less immediate validation. And this is where your edge starts to develop, not trying to outperform the market in every moment, but from how you position yourself within it. Please do not listen to those stock bros. And I mean, don't get me wrong. I like to listen to everybody, the ones that are like, I call them low key like gamblers. Everyone's a gambler, when it comes to the market. But, the guys or the girls that are trading every single day and multiple entries every single day. They're kind of obsessed with it. I listen to what they're saying so you can learn what not to do. Okay, we don't want to be like them because it's an addiction. You want to move smart. Okay, you don't want to be dependent on making the right call every single day. And what I mean by that is that could mean accepting that not every period is meant for aggressive trading. It might mean prioritizing capital preservation over constant activity, meaning keep some money to yourself, you guys. Know when to stop spending. Okay? It might mean stepping back, observing more, and becoming more selective instead of trying to extract opportunity from every movement. Meaning you become okay with taking L's. Because one of the biggest shifts that happens as you mature in this space is realizing that participation is a choice. You don't have to be in every trade. You don't have to respond to every move. And more importantly, you don't have to prove anything through your activity. The market doesn't reward urgency. It rewards alignment. Alignment between your strategy, the current environment, and your execution. And when those things are not aligned, forcing results usually leads to unnecessary losses, you guys. Not because you lack capability, but because the timing isn't supportive of what you're trying to do. So instead of measuring your progress based on short-term outcomes, meaning measuring if you're good enough based off of how much you earn in a day's trade, there's value in looking at how you're navigating the process itself. Are you becoming more patient? Are you more aware of when to act versus when to wait? Are your decisions becoming more intentional over time? Because those are the things that carry forward. Markets are going to always change. Nothing we can do about that. Conditions will always shift, but the ability to adapt without losing your structure, that's what compounds, you guys. And when you start operating from that place, you're no longer just reacting to the market. You're developing a level of control in how you move within it, regardless of what's happening around you. And honestly, this is something that I'm still actively practicing in real time myself, because I'm not sitting here as someone who has it all perfectly figured out. No one does. If anyone tells you that they hit on every single trade, they're a liar and they're trying to scam you and they're most likely going to sell you a course. It's just about learning how to continue to witness yourself in the process, watching the market from a distance. I'm in it. I am making decisions. I'm adjusting. I'm observing what's happening globally and then watching how that shows up directly in my own portfolio. And there are moments where it feels steady, and there are moments where I have to remind myself to stay steady. Not because anything is going wrong, but because this is what it actually looks like to build wealth in a real, moving, unpredictable environment that is not a hamster wheel. It's not clean, it's not always validating, and it doesn't always give you immediate confirmation that you're doing the right thing. But what I'm starting to understand more deeply is that the process is less about trying to control outcomes and more about learning how to move with awareness, with discipline, and with patience, even when things don't feel clear. So, if you're in this space right now, whether you're trading, investing, or just starting to pay attention to how the market works, you're not behind. You're not doing it wrong if it feels a little uncertain. It's all confusing until it's not confusing anymore, you guys. So give yourself grace and give yourself time. If it's been over 6 months and you're still trying, great. You're right on time. Anyone that picks this kind of stuff up fast, I promise you, they're losing more than they're earning. Take your time with this. It's profitable if you take measures to be steady and whole within yourself. That's what this show is all about, you guys. It's all about learning and growing within to experience true wealth from outside of us. So, if this episode helped you see things differently or gave you more clarity, send it to someone else who's been trying to understand what's going on right now. Because I promise you, a lot of people are feeling this and not just talking about it in a way that makes sense. If you want someone to watch about, trades, and none of this is sponsored. I don't know these people. It's just stuff that I listen to. The first book I would recommend is called The Secrets of a Millionaire. I forgot who it's by, but you could Google it. It's like a yellow cover with like red writing or something like that. That's kind of like give you an inkling of like even getting in the mindset of being able to receive, right? Learning how to day trade. I love Clay Trader. He's on YouTube. He's also on Twitter. He live trades every single day. You can choose to opt in with him or opt out. And he also has courses he sells, but he also has a lot of free, very educational and helpful YouTube videos that you can also go and watch. Of course, my podcast, if you want to just have a breather to understand yourself, to have that balance of within before you actually start going to go trade. If you need some grounding, a reminder of your worth, anything like that, I'm here for that. And another podcast I really like, it's not about trading, but it's about investing and retiring and really being smart with your money. It's called The Money Guy Show. I absolutely love them. It's two guys. I think they are both retired CPA agents, both still very young, or at least I think Brian is. He's like 40 something, already retired. So I will check them out as well. Again, none of this is sponsored. It's just what I like to listen to and read and watch in my own free time. And it really helps me understand the market and myself. And as always, you can find me on Instagram at ForbesManda_ or email me at info@balancedestiny.com for collaborations or just questions. As always, I will talk to you next week in the next episode. Love you all very, 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 very much. Bye.